is going to help you to get the better understanding of what Forex is all about and what we are actually dealing with. Okay, let's jump in straight away. What is Forex? Forex is a shortcut to foreign exchange. Forex Markets is an electronic network of banks, brokers, institutions, hedge funds, governments, and individual traders. Forex markets are traded globally, and the main instrument that we buy and sell are currencies and precious metals, such as gold, silver, platinum, copper, and so on, just to name a few. How to sell and buy currency? The chances are you've probably heard of offline exchanges. Over-the-counter, face-to-face money changer. When you are traveling somewhere from one country to another, there is a high probability they are not using your local currency. Therefore, for you, in order to be spending in that country, for having a means to pay for goods and services in that location, you will have to go to a offline exchange, which is located in a travel agency or shopping center, and change your local currency to the one of the country you're traveling to. Online exchange is the one that we'll be focusing on, and it's essentially online Forex broker. What is a currency pair? For example, currency pair pound to United States dollar. On the left, it's called a base currency. On the right is called quote currency. What's the difference? The one on the left, which is a pound sterling, GBP, is the currency that you are buying when you're trading that pair. The one on the right, which is called quote currency, is the currency you are selling when you're trading that Forex pair. So when you are buying a pound sterling, you are automatically selling United States dollar. World currency pairs. We have three main groups: majors, minors, and exotic pairs. The main characteristics of major pairs are that they include United States dollar. They include United States dollar. They are highly volatile. You have a lot of volume traded daily. There are big banks and institutions trading that, mainly from developed countries with strong economy. The minor currency pairs, the difference between the majors and minors are mainly that they do not include United States dollar. You have a pound, for example, pound sterling versus Japanese yen, which is a great currency pair to trade with strong moves. The group of minor currency pairs is still good to trade. The spread is relatively low as well. And what is spread, we will obviously find out in the following chapters and other webinars. Exotic pairs. Exotic pairs are the pairs from the more distant countries, sometimes with less developed economy. For example, euro to Hungarian forint, or US dollar to Philippine pesos. These currency pairs very often have higher spread. They are still okay to trade. However, the moves might not be as strong as the major pairs due to the lower liquidity and lower volume. Just a point to note, some of these currency pairs were giving a nickname like Cable, Aussie, Ninja for the US dollar to Japanese yen. Just a point to note, sometimes you will hear traders using this kind of terminology. Forex and other markets by volume. Forex by far is the largest market in the world at around $5 trillion traded daily volume. Crypto is much smaller, stocks are even smaller. The prime reason for this is that even if you were to buy cryptocurrency, you will most likely need Tether, and in order to buy that, you will need to use USD. So if you look at Forex, there is a lot of market participants around the world. And that's what causes it such strong cap, such big and high cap at 5 trillion. That is also a reason why it is so attractive for traders to be using that opportunity and trading it as opposed to stocks. Of course, crypto is also coming up very strong, but Forex by far is the biggest. Who trades Forex markets? The main market participants, governments and central banks. If one government from another wants to buy weaponry, arms, they need to exchange their local currency to, let's say, United States dollar if they are buying this from Americans. That will also impact the markets because these are very big moves, big positions. Commercial banks, JP Morgan, Morgan Chase, Deutsche Bank, hedge funds, sovereign wealth funds, proprietary firms, which are essentially the firms that are appointed by large corporations to open big positions for these companies to make them profits. And then the retail traders. Retail traders are people who try and attempt to speculate on the price to make money off the big boys, off the big waves of the market. Forex market hierarchy. Major banks. Point to note that the top of the pyramid is major banks, just like Deutsche Bank. These are the market movers. When they open a position, you can see the big waves on the market. They are using the EBS, Reuters dealings matching, Reuters dealing machine, which is essentially a quantum computing high precision spec. Then you have the medium size and small banks, so it's more local bank in your high street, retail market makers, hedge funds, and then at the bottom of that pyramid are retail traders. What moves the price of currency in each country? Interest rates, unemployment rates. If the unemployment is high, people have no money, then therefore they don't order stuff online, they don't buy products, and the currency is affected. Imports and exports of goods. If you have sanctions on particular country and they are not able to import goods or export goods, that will also impact the currency moves because there will be no exchange. Government debts and ability for this government to pay this off. Overall, the economical health of each country. Market session times are very important for each trader. I would advise you to, depending on where you're watching this from, to check when is actually Asian, Europe, and US session in your country, in your local time. Asian session is Sydney, Europe session is London, and then US, New York. It's important to know when the sessions begin in your local time, at your local time, because the liquidity is much higher, there's more market participants. Overall, more action and more probability for the bigger moves for you to catch. Trading hours for Forex, unlike crypto, which is 24/7, you have them from Monday till Friday, 24 hours with Saturday and Sunday off. What does it mean to be a retail trader? You are essentially a risk manager that speculates the price of financial instruments or commodities or currencies. Trader opens position buy or sell that is based on what you see on the chart. There is an information encrypted in candles, in patterns, on charts that you can address and identify when making that decision. You always have to consider the fundamental analysis as well. And for fundamental analysis, I advise you to look at investing.com and Bloomberg, where you have the news and data, you have the consumer price index and order readings over there. These are readily available for you online, free of charge. For technical analysis, the best is TradingView. This is something that every trader should be using. And of course, a MetaTrader, which is essentially the tool for you to open a trade, to open a position. However, it is also good for your analysis. Thank you very much for the chapter 1. Let's jump in. Let's go ahead and see the chapter 2.